Hey guys, Tyler here. Today we're going to be talking about how to calculate your mortgage payment in 10 seconds. Now, you don't need a calculator, you don't need a piece of paper. As long as you can do some basic math, you'll be able to do this. Now, I'm sure you have, or maybe will be, going to go through some homes, open houses, or looking at some houses with a realtor. And the question always comes up, it never fails when I'm with my clients. They ask me, what would my payment be on this home? Or you look at another home. Well, what would my payment be compared to the last house? Well, this little trick is going to save you a ton of time and alleviate a bunch of stress in the process, because in the market that we're in right now, you typically have to make very, very quick decisions. And when you make quick decisions, they tend to be very emotional decisions. This is going to help alleviate some of those emotional decisions that you're making and really look at the financial side. Look at the numbers to see if it's really practically something that you can do as a couple, or if this is a home that you can actually buy. So let's get into the video and let's show you how this works. Now, there is a precursor to actually be able to do this. When you get pre-qualified with a lender, you need to ask your lender for an estimated cost sheet based on a price point that you want to purchase. So let's just say, for example, we're going to use $300 in this case. So your bank is going to run the numbers, do a conventional loan, 5% down at $300,000 for 30 years, and they're gonna give you a number. Well, in this case, this number is $2,276. Now you're going to take that number, and this is the number that you're going to actually put in your pocket when you're going through all these open houses and you're looking at all these homes. When you go to these homes and you see a house, let's say for $305,000, well, all you have to do is add $8 for every $1,000 you increase in price from that $300,000. So in this case, if you go up $5,000, 5 times 8 is 40. So you're going to increase this $2,276 payment by $40 a month. The inverse is also correct. If you're buying at $295,000, you can subtract your mortgage payment by $40 a month. Now, there's a couple variations that you need to make sure you consider. First off, if your interest rate is lower, let's say 3%, it's usually around $7 for every $1,000 you go up or down in price. For interest rates around 4%, you're going to use a $8 for every $1,000 you go up in price. Let me show you an example here. If we were to just get rid of this $300,000 number and we were to just put $1,000, look what your payment would be. Your payment would be $8. So if you were to go to $2,000 for a purchase price, it's going up to $16 because you're adding another $8 to it. This is extremely helpful when you're walking in a home, because with how fast the market is moving right now, you can determine what your payment's going to be before you ever put in an offer, and you typically have to put in an offer relatively quickly in today's market. Here's the other thing about it. If you're in a multiple offer situation and you offer, let's say, $300,000, and your realtor, is negotiating hard on your behalf, and your realtor finds out that, hey, I just found out there's an other offer for $310,000, but if you're willing to match their offer, they will accept your offer. You're going to $310,000, that's an extra $10,000. 10 times 8 is $80 a month. And you can use this number to really determine if it's a home you want to pursue or not. I've had buyers in the past that will say, Tyler, $300,000 is the limit. I'm not willing to pay a penny more. You negotiate hard and you get that home for $300,000. Well, what would happen if you're just $1,000 apart? Are you willing to go up $1,000 that would only increase your payment by $8 a month? I would, because at the end of the day, what you really want is a home. Also, if you put a 20% down payment, that number's also going to decrease. So you're going to be around $6 for every $1,000. Now, I did find out, I had some people ask me, well, what would happen if I go up to $2 million? Well, this principle still stays the same. Nothing changes. We just did those and ran those numbers. For every $1,000, it goes up $8 a month. This quick trick is going to get you relatively close in a matter of just a few seconds. Now, there is a negative to all of this though. The positive we just discussed. It's only $8 to go up in price, and you may be able to win an offer at the end of the day. Well, the negative is for every $1,000 you go up in price over the course of your loan, which typically is 30 years. And we used an example of 4%, so we'll continue with that example. You're going to be paying an estimated average of about $682 over the course of 30 years in interest. So you go up $2,000, well, guess what? You're going to be paying $682 times 2 in interest over the course of the loan. So that $8 is relatively cheap, but you're going to be paying it back in interest over the course of 30 years. And this, honestly, guys, is going to help take you out of the emotional car seat that you're sitting in when you're looking at these homes competing against all these other buyers. You can now practically and financially look at these homes and say, can I afford this increase in price? Can I afford competing for this home? And you're going to be able to see those numbers very, very quickly, and you're not going to, at the end of the day, have buyer's remorse because you didn't know what your payment was going to be. So the first thing you need to do, again, is you need to go to a bank, get pre-approved, ask them for an estimated cost sheet. Once you get that estimated cost sheet based on the purchase price that you want, you use that as your baseline, and you add or subtract that $8, $7 per $1,000 you go up or down in price to calculate that number while you're going through the open house or looking at homes with your realtor. So guys, if you found this video helpful, do me a solid, hit that like button. My videos with this size of a channel get routinely overlooked by the YouTube algorithm, and your quick like and tap would be greatly appreciated. And if you appreciate videos like these, I'd love to hear in the comments what other videos you would be interested in. And guys, until the next video, I will talk to you soon.